You are now listening to The Unwavering, the movement dedicated to educating and empowering the brave men and women who have or are still serving our great nation. Hey, what's up, everyone? Thank you for joining us for another episode of The Unwavering. Before we begin, as always, I want to take a little bit of time to say thank you to all of you guys who are currently out there deployed, training, doing workups, getting ready to go on their next deployment. Thank you guys for the sacrifices that you're making. And hopefully what we say today and us talking a little bit about the home buying process helps you and your families. At this time, I'm going to go ahead and transfer the mic over to Dan. Go ahead and introduce yourself.
Hey guys, back for part 2 here. My name's Dan. I served in the military for 5 years on a submarine. Greatest 5 years of my life. Worst 5 years of my life. So we have a special guest back on. His name is Alan. I'll let him introduce himself.
Yeah, I'm Alan. Thanks for having me back for part 2. Been in the business for about 6 years now. Been licensed realtor for 4. I was a full-time assistant 2 years prior to that. Ran more of the transaction side, the paperwork side in those 2 years. And when I became licensed, I just went full-fledged and, started doing everything on my own.
Alan, thank you for joining us. Last time we got deep into some specifics. We talked about escrow. We talked about
home inspections,
different
Addams
things
family.
like that. We did talk about Addams Family, which I'm actually a huge fan of the Addams Family. More so the Munsters.
I'm more of a Casper person.
Which Casper?
The friendly ghost.
Yeah, I know. But
not the beds. I mean, the beds I might be a fan of as well.
Yeah, I haven't tried one, so I can't really. Anyways, thank you guys. Now I kind of want to talk about the VA home loan in general. In my opinion, it is probably, aside from education, one of the greatest benefits of being a service member and serving your country. Can we get into that? What makes the VA home loan such a powerful tool for people to utilize? Like, what advantages does it give us when we're purchasing a home versus someone who does not have the benefit of the VA home loan?
Yeah, definitely the 0% down payment. I mean, that's huge. Everybody else, if you're going to go with regular first-time home buyer loan, FHA loans, got to come out of pocket 3.5% of that purchase price just on the down payment. That's not including closing costs. With the VA home loan, you're at 0% right off the bat. I mean, that's saving you thousands of dollars right off the bat to go into a home.
And that's not saying that you shouldn't put money down, right?
Correct. That's not saying you shouldn't put money down. But generally, you don't have to put money down with your VA loan. That's on the down payment. You do have other costs, closing costs, but down payment, you're good.
I mean, that right there in itself is huge. You just said it yourself. Depending on where you purchase your home, how much you're purchasing it for, that could mean a couple $1,000s to tens of thousands of dollars. So what are some other benefits aside from just the 0% down?
The other benefit is no private mortgage insurance, or PMI as it's known. Everybody that is not going to come in with a 20% down payment, everybody else has got to pay a private mortgage insurance. That's not going towards interest or principal on your mortgage. You're paying an insurance for the bank. So if you were to default on your loan, that insurance is going to cover a portion of those losses. So that bank is not going to take that complete hit if you were to, stop paying on your loan. On the VA side, you don't pay the PMI. There's no PMI. The government basically backs that loan to make sure that if you stop paying on it, they will cover it. So it's not coming out of your pocket monthly. And I mean, that's anywhere from like $300 to $400 a month,
on top of fees and on top of your monthly payments.
So definitely lower monthly payments because of no PMI.
Out of curiosity, so the PMI, has it always been around, or was this kind of like a result of the housing crash back in 2008, 2009 timeframe? I know that there's a lot of people that back then were looking to purchase homes, and a lot of them did end up defaulting on their homes. So is that a result of this, or has this always been around?
I think this has always been around, yeah. What happened in that time frame, that was a completely different issue. That was just bad loans going out, people that were getting loans that should have never gotten the loans to begin with, that didn't qualify. Now, with the amount of questions that these lenders ask you, they really want to know everything. I joke around with my clients, it comes down to the point where I'm like, they want to know how many times you're going to the bathroom a day, but they really want to make sure that you can qualify to make sure you can pay that money back. They definitely get pretty deep into your finances and your life.
Yeah, that's pretty wild. I mean, lesson learned though. They ended up, like you said, loaning out money to people they shouldn't have. So it turned around and bit them in the ass. So
a lot of new regulations after that.
Wasn't it like adjustable rate mortgages too kind of did some? I don't know.
Yeah, it was a lot of that too. Balloon payments. You're paying a very low amount for the first 2 years, and then on that third year, I mean, your payment skyrockets. equity was raising so quickly, these prices were raising that people were thinking, I'll buy this home, I have a low monthly payment, and in a year I'll have some equity in it, I'll sell it, and I'll keep doing this. But that didn't happen, and it got to the point where people couldn't sell them anymore, and their payment ballooned, and they couldn't afford those balloon payments.
Well, again, for all you guys listening, that's just one more reason why you want to align yourself with the right people. Make sure that you are talking to a reputable realtor, a reputable bank, a loan officer, so on and so forth, because they can actually save you from a lot of hardship. Look at it as you are forming a council. You're surrounding yourself with the best possible experts in their field, so collectively they can advise you whether or not the home you're looking to purchase or the property is worth your time. Now, again, they can't always plan for the future. I know I talk to Alan all the time, and he can't accurately tell me whether we're going to have a housing crisis a year from now, 3 years from now.
I wish I had a crystal ball.
Yeah, exactly. He doesn't have a crystal ball, but I know that the questions that I do ask and the ones he's able to answer are going to do everything that they possibly can to look out for me. The rest is kind of just the market and other external factors that he has no control over. But make sure you guys are surrounding yourself with the right people and being patient. I know when I was looking at homes with him, I was like, I guess this house is decent. I guess it'll work. He was like, no, you'll know if it's the right house. Don't ever settle for something because this is a long-term investment. So just think about that. Don't be willing to settle on anything less than what you feel you deserve and what you are putting your hard-earned money into. Again, that's why I kind of have that relationship with Alan, and I was looking forward to having him on the show because I do have a certain level of trust and confidence that he's going to point me in the right direction. I am able to ask Alan some of the questions that not too many realtors are willing to answer, but luckily having him here, he has agreed to give us more insight. So what are some things that, I don't know if you want to call them secrets or what you want to say, but I know there's a lot of information that loan officers don't tell us, that realtors don't tell us. What are some things that you have seen that you can warn us about or maybe tell us about that we can use to our advantage?
Give me some dirt here. What are you guys doing in the back room of the bank? Do they really have security vaults back there?
I wouldn't say too much dirty secrets. A good agent, we have a fiduciary duty to make sure we have our clients' best interests in mind. But I have heard some really shady stories out there. Agents just double-ending deals without marking the properties properly.
What's double-ending deals?
So they'll list a property and they'll be the listing agent and they will be trying to get a buyer on their end to purchase that property. They're double-ending their commission, basically.
So they're representing the buyer and the seller?
And the seller.
Why is that a bad thing?
It's a bad thing when you're doing that and kind of pushing other agents out and not allowing other people to come in there as well.
Yeah, it hurts the buyer and the seller.
It hurts everybody in the process, yeah.
That's insight that we don't have. And again, I'm really new to the whole home buying process anyways, but I didn't know that one realtor can cover both the selling and the purchasing of a home. I always had this idea that they were two separate entities. You had the one who puts it up on the market for sale, and then me as a home buyer, I come in with my realtor and he helps me purchase. So I didn't know that there was things like that even existed. And again, I'm sure there are some great ones out there that can both list and sell a home. So we're definitely not saying that's a bad thing, but I just want to educate the people more on what's really going on out there that we may not see, what's not common that we don't hear about. As far as loans and loan officers, without getting into specifics, what are some bad scenarios that you've seen happen that you can tell us about so we can avoid them ourselves?
I see this like home buying thing kind of like renting a car where you go up to the counter and they're like, do you want this insurance? And a GPS is this much more. Is that the same with like the bank?
No, they don't try to.
It's like, would you like to buy the earthquake damage and you
the
like
paint coverage?
There's nothing like that?
No. I mean, they don't try to
the
upsell.
Insurance companies, right?
Yeah.
For the record, I always decline the extra insurance on my rental cars.
There you go.
Oh, I threw us off.
Question.
Yeah. So, loan officers or loans in general, what have you seen bad that we can be aware of?
I always say shop around. Just because a certain lender gave you a certain amount, it doesn't mean that that's the lowest that they can go. I mean, I see it all the time where I'll have a client shopping a rate and a different lender can give them a better rate. And then they go back to that original lender and then that lender will say, oh, I can match that rate too. So lenders will make their money depending on a rate that they sell you, the agreements that they have with their specific bank or broker. So the higher the rate that they can sell you, the more money that they're going to put in their pocket. And and sometimes there's wiggle room in there, and sometimes there's not. It really just depends on individual situations.
What kind of rates are you seeing right about now? What's a good rate?
I've seen
and again, if we could be just, county specific, state specific.
Right. Yeah. Riverside County, the rates are like around 3.5% for FHA. VA, I'm not 100% sure where they're at right now. And conventional is a little bit over 4%. So, but the rates, they move up and down daily.
Do you generally see VA being pretty competitive for loan rates, or is it usually higher, lower?
Yeah, no, they're good rates. VA and FHA usually get pretty good rates.
Awesome.
Conventional loans are a little bit higher usually.
So tying back into what you said originally, where there may be some wiggle room or you may get a better rate, what are things that we can actively do to give us the best negotiating power? Earlier you mentioned was getting your credit right. So what are some other things? Is having money tied up in investments, is that a good thing? Is that a bad thing? What are other things that we can do to give ourselves more negotiating power when we are going for that loan?
Well, the rate is really going to depend on your debt to income situation, how much debt you have versus how much income is coming in. The higher debt you have, the more of a risk you're going to be to the lender. So the rate might be a little bit higher. Also, when it comes to credit, the lower the credit score, the higher the rate. The higher the credit score, the better shot of getting a lower rate. Also, when it comes to credit scores and rates, if you're a married couple, realize that they do take into consideration the lower score of the two. So sometimes I get people, I have the wife has an 800 credit score and husband's got a 640. Well, the bank's going to look at the 640. They're not going to look at the 800. So whichever score is lowest of the two is the score that they're going to be looking at. So focus on fixing the one with the lowest score to bring that score up to get a better deal.
Okay. And talking about scores, because I know we had talked about this offline previously, what is considered a perfect credit score? And why is that important to have that so-called perfect credit score? Does it help me in any way as a home buyer?
On the VA side, you're definitely going to get a little bit of a lower rate. On the other side, it'll help you with the PMI. The higher credit score, you'll have a less PMI payment. It's pretty much just going to determine your rate.
So 850, that's the highest,
That's
right?
the highest, yeah.
I want to talk to everyone right now about our conversations. Whenever I bug you about a house that I just saw, I always went to Zillow, Trulia, Redfin, all these different home purchasing websites. And my issue with them, I think they're great. It's a phenomenal tool, right? Because it does tell me, hey, this is the neighborhood you're looking at. If you do have children in elementary, middle, high school, these are the closest schools. This is the school district you'll be a part of. These are what the schools are rated. So it does have some benefits, but for me, the big issue when I use those sites and I type in my information, sometimes I'm looking at a house. Let's say I was looking at one in the $500,000 or $400,000 range. I calculate it and it's like, oh, hey, your monthly payments are $2,600 a month. And I'm like, oh, that's great. I can definitely afford that. But then when I talk to you and you utilize your tools, I get a much more realistic number of $3,800 or something like that. So why is it that when I use those websites, is it that they're not accounting for certain taxes or HOA fees, Mello-Roos? What are they not showing me that you as a realtor can dig up through your database and share with me? You know what I mean?
Right, yeah. So those calculators, they're pretty default. You put in your interest rate, purchase price, HOA fees, and then it has a default for taxes. And the thing with taxes in my area specifically is there's a lot of special assessment Melrose tax. So there's a base tax, which in my area is about 1.2%. And then on top of that, there's a special assessment tax for new or build properties that will raise that overall tax rate to 2%. So when you're calculating on Zillow, you don't know what that specific tax rate for that home is because it's not going to tell you that. So when you're calculating a payment at 1.2% tax rate, and then I look up the tax rate and it's actually 2%, that's a big difference in a payment. So I personally won't show a property without disclosing the tax rate to my client just because I know that in my area, it varies from neighborhoods. You can have a community and right across the street, you have another community with a different tax rate. So it varies a lot. So I won't even show the property until I tell my client, hey, look, this property's got this tax rate and your payment's going to be around here as an estimate. Because, there's no point of showing something that you're not going to qualify for.
One thing I see on Zillow, I have it pulled up right now. I have a house on here that they're asking $800,000. Zillow estimates it as being $800,000. And then it goes over to the price and tax history. And tax history says the tax assessment is $243,000. Why is it assessing it as a property worth $243,000?
Well, the assessed value would be when the property was purchased. So it just depends as to when they purchased that property. That would be the assessed value is what the government is basically saying your property is worth and what you're paying taxes on.
So if you then bought it for $800,000, the assessment would go up to $800,000?
Correct. That would be the new value.
All of a sudden, you would be paying a lot more property taxes than they had previously.
Right. Yeah, that's going to change greatly. Also, if the values are rising, the assessor's office, they will raise your taxes. They can only raise them, I believe, 2% yearly as a max if property prices are on the rise. But when property prices are on a downturn, you could also hit them up and pay for an appraisal and say, hey, you know what, my property is not worth $600,000 anymore. It's worth $300,000, and you can get that amended so you're paying lower property taxes.
I wouldn't even know where to begin, who to talk to about that.
Your county assessor's office
Okay.
for the county or your city.
And if for some reason they don't know how to locate that, I'm sure they can talk to you or another realtor,
Oh,
right?
of course.
And you can kind of point them in the right direction.
Yes, of course.
My luck would be I get like a tax assessment and they raise it. They're like, oh yeah, you're worth a lot more now. I'm like, crap. Now I just paid for an assessment and now I have to also pay like an extra $2,000.
Actually, that's a good point. Is that a possibility? Like you tell them, hey, I want someone to come and assess my property. I think it's worth less than what is currently being said. Can they actually find out that, hey, you know what? You're right. There is an issue, but it's not that it's overvalued, but it's actually undervalued. Like, is that a possibility that they can?
Yeah, but I mean, regardless, they can't raise it more than the 2%. Yeah, but tax rates are very important to look at when shopping for properties because they do vary and it will change your payment. Also, HOAs, those are pretty easy. You can find those on Zillow and Trulia and all that. You can find the HOA payments to calculate that as well.
Speaking of HOAs, I've heard a lot of pretty crazy stuff about them. If you buy like a condo that's part of the housing association, they can control whether you paint your house or...
Yeah,
like,
the
that's
HOAs.
Insane.
It is insane, and there's a lot of plus and minuses to HOAs. I talk to a lot of people that say, I do not want a property in an HOA neighborhood. I want no HOA in my neighborhood. I want to be able to do whatever I want with my property. And that works well in areas where people upkeep their properties. But then you have areas where there are no HOAs, and you have the dry grass and people parking their cars on their lawn.
Don't talk bad about my trailer park.
You know,
that's a good point because I've driven through neighborhoods where it's like you've got 3 or 4 houses in a row, super nice. Then you get to the 5th, 6th, 7th house, and the thing's bright purple. I'm not BSing. Yeah. Like I've seen a purple house in the middle of what seemed like a normal looking neighborhood. Could their house being purple bring down the value or what people are willing to pay?
Of course. Yeah, desirability. You know,
haven't you seen that Zac Efron film where the house is in escrow and like they're like partying and stuff next to the college house?
Yeah.
Come on.
Yeah, that's
Zac Efron taught us this.
Yeah,
okay.
Definitely bring your property values
Zach, if you're listening, thank you for that life lesson.
Good looking dude.
Yeah, so that's why we want to ask these questions because if you are part of an HOA, a homeowners association, like you said, there's pros and there's cons. Growing up in my family's home when I was younger, we were part of an HOA, and it was nice that they had a sweeper come through the neighborhood and sweep the street every single day.
Right.
They had someone to come pick up the trash cans, and overall the neighborhood looked really well. But then there were other times where my parents would get a fine because they had one small spot of yellow grass. Mm-hmm. And so I think first they got like a warning. My dad tried to use like fertilizer with like, I don't know, some sort of special chemicals. It still stayed yellow. And then they ended up like giving us a fine. I think it was like $25 or $50, but
spray
still
paint that. You get your rattle can.
Well, he just cut that entire piece out and replaced it with new grass, and we were fine. But there's definitely pros and cons to being part of an association. So it's really, like Alan said, up to you, what you want, what you're looking for. If you want to spend a little bit less money and have more authority over what your lawn looks like, what your house looks like, what color it is, then maybe an HOA is not for you.
I don't get how, like, if you own the property, you own that house, how this other authority can just come in and fine you for... Do you actually own the property?
Yeah, but when you purchase the property, you're agreeing to these bylaws, you know. So when you're in the escrow process, you will get a packet that is maybe like 3 inches thick of all the HOA bylaws in your community. And you're supposed to review that whole package and make sure that everything that's in there you're in agreement with, and you actually sign off on that.
Who gets the money when you have to pay these fines for like your brown
The
spot?
HOA.
Yeah, the association.
Yeah, they take it.
I'm starting an HOA.
Yeah. It's a lucrative business.
This is a good business to start
Yeah.
fining people. I don't like the way your curb looks or like your...
But, you know, not all HOAs are that strict. It really varies by community. And your best bet's probably talking to some neighbors in the neighborhood and asking about the HOA. In my experience, most of the HOAs are pretty lenient. They have common sense, so they're not going to be hardcore sticklers on everything. But there are communities where the HOA really gets into your life and doesn't allow you to do what you want with your property. There's one community where the HOA, if you wanted to plant a tree in your backyard, a small tree or pretty much any improvements to your backyard, you have to get both neighbors on both sides. You have to go knock on the door and tell them what you're doing, to have them sign off on what you want to do in your backyard. And then also, if you have neighbors on the other side of your yard, you would have to get pretty much 5 signatures for all your surrounding neighbors that they are approving of you planting a tree or, you know, doing some sort of improvement to your backyard. So in my personal opinion, that would bug me. I would not want that for myself in an HOA, but there's people out there that they don't mind that and they'll do it.
That's pretty wild. One last thing I wanted to go over before we go ahead and end this episode, because again, talking about, you know, real estate, home buying, the VA home loan, investing, this is something that we can talk about for a long time, and I'm sure we'll continue to cover it in future episodes. But we briefly mentioned Melrose.
That's a neighborhood in Los Angeles County? Melrose?
Melrose, yes.
Yeah, no, I know all about it. I saw the TV show Melrose Place.
No, not Melrose. We're talking about Melrose. Anyways, thank you, Dan. So, Melrose, I know this may not be in every state. I know it may not be in every county. But when we're talking to the listeners who are listening from Southern California, can you talk about what is Melrose? What does that money go towards? You know, you talked about these projects and stuff, but is it something that is going to necessarily benefit you and increase the value of your property, the community you live in? Or is it just another thing that we just have to deal with and they're just taking money from us?
The Melrose is every time they're building new properties, depending on the infrastructure that is surrounding those properties is where these Melrose are coming from. So for example, in my area, there's a lot of vacant land that they're developing, new vacant land. When they're putting 1,000 new homes in this new area, you now need fire stations to support this new community. You need added police officers. You need added schools, parks, sidewalks, streets, all that stuff. So the builders will take out bonds and basically put it on the homeowner's back of that new community. So everybody in that new community is going to be paying for those
new facilities. So
Yeah.
the new fire department, though.
Correct. They will fall off eventually. I mean, those bonds or loans are usually anywhere from 20 to 30 years. So when that property, that community hits a maturity date, they paid off those loans, those bonds, then your property tax rate will drop back down to the base tax rate, 1.2% or whatnot. It's not an individual thing. It's everybody in that community is paying that specific Melrose added tax for those utilities.
Okay, but it also seems like what you're saying, if it's going towards city parks, fire department, those are all things that are going to help my property value increase, right? So it is a good thing. Yes, it does suck that you're stuck with a little bit more of a payment, but in turn, it's helping better the community. Is that right?
It's a newer community, and if you want to live in a new community, you're most likely going to pay higher taxes. It's not necessarily going to help you on price of your home due to the fact that at the end of the day, people can only afford so much. I get this all the time. I have buyers that will be like, hey, this is a beautiful house. It's a lot cheaper than the houses we've been looking at in the older community. You know, let's go look at it. But then I look at the taxes and it's like 2%. So when you run the payments, even though the price of the house is less, your payment's still going to be a lot higher because of that tax rate. So at the end of the day, I always look at the payment.
Some food for thought, definitely. Well, unfortunately, that's going to be all the time that we have today. Alan, how can these guys get in contact with you? And before you finish with us today, is there one thing that you've been thinking about with regards to veterans and them utilizing, the VA home loan?
Well, definitely, I would say if you're going to be staying in an area for a while, look into purchasing a home. There's a lot of credits that we can get back from a seller or whatnot, so your actual money put down to get a house could be less than the deposit that you would have to put down on a rental property if you're going to rent a property. Depending on the situation, it'd be less out of pocket for you than even renting. So it's definitely a good idea to explore those options. And yeah, you just get a hold of me. My personal cell phone is 951-303-5947. Call me, text me, whatever's easiest, and I'm always working.
Thank you again, Alan, for taking some time off to come join us. And Dan, thank you again as well for taking the time to sit down with us and spread your infinite wisdom.
For the record, I'd like to change my favorite ghost from Casper to Beetlejuice. I like him a lot better. He has cool pants.
Beetlejuice, huh?
Yeah, I mean, look at his pants, man. You gotta respect someone who walks around with striped pants like that.
All right, guys, that's all the time that we have today. Thank you for tuning in.
Thanks for listening to The Unwavering. Please rate and comment on Apple Podcasts. Give us a 5-star and a great comment, and we may just read it on a future episode. Also, follow us on social platforms like Instagram, Facebook, and YouTube. Be sure to check back with us next week.